You got to know Sequoia. This was the company that was the early stage investor in names like NVIDIA, Google, Airbnb, and so many more. Sequoia Capital partner Brian Halligan, working closely with the hottest AI startups. He's also the founder of the customer relationship management platform, HubSpot. It's like having a unicorn here, one of the Sequoia guys. Thanks for being here, Brian.
Thanks for having me.
Well, what do you make of what's happening in D.C. and then what you're doing? They're working with big names, I'm sure, but hopefully they're also looking at the startups because why? Where do startups fit into this?
One thing I like about DC these days is they are doing more business with startups. They're kind of open for business. They said they were going to do that. They actually are. And a lot of the Sequoia portfolio companies are doing business with the federal government in a way that I hadn't seen in a long time. So I like some of that.
Well, what does it mean when you have two funds? One is for these Series A, very early stage companies, and then another one for the founders. What does that mean?
They actually have four. They have a founders fund, they have kind of a Series A, they have a growth fund and an expansion fund, and they even have a public fund. They kind of have the whole stack. And that's one of the benefits of being Sequoia. They got a great track record, so they're able to raise capital and deploy it really efficiently. But they kind of cover the whole map. Sequoia is doing a lot in AI, and some of the companies are just doing really, really well. I lived through the '99 bubble. I'm old enough.
.com?
Yeah. And, you know, history, it doesn't repeat, but it rhymes. Kind of rhyming now. The valuations are sky high on these startups. The thing that's different, Liz, the traction these little startups are getting is unbelievable.
Define
the demand.
Traction.
Like, I had dinner last night with a couple of Sequoia CEOs, the CEO of Rogo, which is AI for investment bankers, the CEO from Profound, which is AI to help you get found inside of ChatGPT and all these systems. And like they started a little over a year ago, and it's tens of millions of revenue. The slope of the curve is like that. I have never seen it's galactic growth that Homo sapiens have never seen, and there's a lot of them.
You're speaking in superlatives.
It's incredible growth. The valuations are also incredibly high. So it's a little scary. It's
okay.
a little bubble-icious.
A little bubble-icious. Which part of it? Because we see a headline about Google coming out with its chips and suddenly everybody's flipping out about the Oracles of the world and NVIDIAs and AMDs and ARMs, and they're selling those, and then they realize, wait a minute, hold up, it takes a while. Is it too knee-jerk a reaction in some of these moves?
Well, just in the news in the last day, I think it's been pretty interesting. NVIDIA had a great quarter. I don't think they're terribly overvalued. Like they're 30-something times earnings. Like I compare NVIDIA today, the most valuable company in the world, to Cisco in the bubble. Cisco did like $2 billion at their peak, and they traded at like $400 billion. NVIDIA probably this year will do 125, and they traded, $4 trillion. The multiple is like 200x versus kind of 32x.
Yeah, Cisco's market cap today is 300.
Brutal.
Million.
Yeah, brutal. The other thing that's a little bit different.
Is that going to happen?
I don't know what's, I don't know what's actually. The other thing that's a little bit different this time is Cisco sold. There was some analysis done of like how much of that fiber optic that was put in the ground was actually lit up, used, and it was like 5%.
Well,
whereas the NVIDIA chips is like 95% are lit up. So it's a little bit different.
For now, but maybe the buildup of all of the data centers. Do you see the bubble there?
I'm a little bit worried about some of the circular trading. I'm a little bit worried about some of the private debt. But I'm not that worried about valuations. If you look at 6 of the 7 Mag 7 companies, their price earnings ratio between 20 and 40. It's not, and their businesses are very good. It's a little different.
Let's go back to D.C. and its role. It was in the last administration, the Biden administration, so we're talking more than 2 years ago. And this really plays into startups trying to grow very quickly and spread out all of their customers. It was more than 2 years ago that Chuck Schumer, then the Senate Majority Leader, he put together the AI Insight Forum, the very first one. I mean, everybody from Palantir's Alex Karp to Elon Musk of XAI, you had Satya Nadella, you had so many other people. That was Mark Zuckerberg of Meta. There's Bill Gates, and Sam Altman was there. They all came in talking about regulation and trying to figure that out. 2 years later, nothing. And now there's a big battle between the states who said, you know what, we're not waiting around for you guys. We do need some type of ring fencing. I mean, there are deep fakes all over the place that are really affecting people's reputations. So they're unhappy about that. Children are involved. And then there's the federal government that is steering people away from that. They would like a uniform regulatory opportunity or landscape versus the patchwork states. Where do you stand on that?
I think there will be some regulation. What I hope we don't do is turn into Europe that overregulated all this stuff and really kind of stifled some of the innovation. Europe's now kind of simplifying some of those rules now, and I think it's good for Europe, but I don't want to see us go too crazy. I would prefer national versus state by state.
Well, let me let you hear what Jensen Huang told us on the Claman Countdown just last week about regulation. Listen.
Just as every healthcare product has regulation, every consumer product has regulation, every transportation product has regulation. Whatever industry, whatever use case, whatever application it is, it should be held up to the same regulations. Now enhanced for artificial intelligence. The end use should surely be regulated.
That sounds like federal.
It does. Jensen, by the way, is a very smart man. And I coach all these early stage CEOs. And like I kind of grew up with like, it's all about Jack Welch. Now it's all about Jensen Huang. People are following him. He's got a very unusual way he runs his company. He's sort of the new model of CEO in my mind.
What model is that? And I find it so interesting. Again, what I've learned about you in this short period of time, Brian, is you love to speak in superlatives, but an anaphylactic negative response, an allergy to any middlemen. So that would be like lots of middle management. It's just come and talk to me.
I mean, they don't. There's a lot of things there's less of. There's a lot of less layers in an organization. There's less barriers between themselves and the customer. It's sort of less left. They stripped everything down. What is not less of that I think is interesting is all these AI startups are hiring like crazy. They have tons of open headcount. They're hitting the gas on hiring. It's kind of interesting.
And finally, do you foresee one of them eventually taking over sort of the first in wins theory, the ChatGPTs of the world?
Well, if I look back at the last bubble, Google, Amazon, Salesforce came out.
Yeah.
Pretty good companies. I think this time, OpenAI is going to come out. There's going to be more of them. I don't know how many. But I think things will go up and then they'll go down and they'll come back up again. And I think a bunch of these companies are going to make it through. And like what I'm focused on, Sequoia is focused on, is finding those best founders with the best business models, best teams that can work through all that and sustain like Bezos did with Amazon.
And how important is it for them to launch IPOs eventually?
I think eventually the IPO market's pretty soft. And some of the IPOs have gone out, have lagged. But what's different with IPOs today is when I grew up and I was a CEO, you couldn't really take any money off the table and sell shares on your way up. It wasn't a thing you really did. So your liquidity event was the IPO. And so you had no money prior to the IPO as a founder. You've been at it 10 years. It's very different now where founders take actually a lot of money off the table on the way up. And so there's less strong incentive, let's say, for the founders to go public. So I think they'll be patient and wait till the window's open.
Brian, great to have your perspective right here on the Claman Countdown. Please come back.
Thank you.
Good to see you, Brian Halligan.